Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this Monday, August 12th edition. And we're going to be briefly talking about the stock futures here as it remains changed ahead of key inflation and retail data. We're going to get some data to see if this inflation is continuing to tick up point by point, and also retail sales if they've slowed down here. So we're going to see that. U.S. equities fell on Sunday evening as investors braced for key inflation data after almost completely reversing its violent market rout last week. Dow Jones futures are down 48 points on the Dow, 100 points or 0.5% on the NASDAQ right now. As you know, on Friday, all the indices went up tremendously and they bounced back from a horrible Wednesday and Thursday. And now everybody's wondering, is this going to be a long-term trend or just a short-term blip in the market here? Investors are hoping to get a better sense of the state of the economy after recent fears of a job market slowdown spooked traders and rocked the markets. So Tuesday today, they'll be watching the July Producer Price Index report, the PPI report, followed by the Consumer Price Index report on Wednesday, for confirmation that price growth has continued to stabilize. Well, let's not expect that. I don't think prices are going to stabilize. They haven't been stabilized since the beginning of the health crisis, the pandemic back in 2020. And so that's not likely to happen. July retail sales are also due out on Thursday. So this is a very important week here we're going to see. And this is going to determine this is probably going to determine how much of a rate cut we get in the first week of September by the Federal Reserve Bank. They're going to be looking at this data too as well. So another good round inflation data could help calm fears that the Fed is potentially losing the plot. Investors have, quote, jumped to conclusions about the economy, and now they're going to analyze a fresh batch of data to judge how warranted this sell-off actually is. So everybody's selling off and buying, shifting things around, getting defensive, getting discretionary in the Wall Street to help protect their the investments or savings or IRAs or index funds. And it's showing here. But retail sales, too, also show that fears of a job market slowdown are, quote, overblown. We haven't seen too many alarming details in the U.S. consumer up until now. It's important to consider the totality of spending data instead of panicking over a lukewarm jobs report. Well, that may be true, but the problem is that we're having several months of lukewarm job reports, and job creation is going down. That's the big deal. And so Dr. Doom, Nouriel Roubini, is actually upbeat about the economy. So you have other people here that's saying that the economy is okay, mixed bag, but the 10-year Treasury yield dips as traders weigh state of the U.S. economy ahead of latest data, according to CNBC. The Treasury yield we have an inverted yield curve, and usually 6 months to 12 months after that, then the recessionary fears come into play. As you can see, they were lower on Friday. 6 basis points lower at 3.94%. It was holding near the level last week before the volatile jobs report came out. A weak jobs report came out this past Thursday. So the yield on the 2-year note was up less than 1 basis point at 4.051%. Yields and prices move in opposite directions. So 1 point basis yield is 1/100%. So in any event, that's not a good sign because initial unemployment claims totaled 233,000 in the latest week in the figures, and that's continuing to climb, and continuing jobless claims going up. So we have unemployment benefits, those who are filing for benefits in all areas of the country going up, and then we also have prices going up on goods and services. So that's not a good combination for growth. But they're going to spend it in this economy, showing that things are good. CNN pre-market is showing extreme fears driving the U.S. market. Yeah, because everyone's trying to spend it as, hey, it's just a temporary thing. Remember, they told us that inflation was transitory. It was temporary, not a big deal. And now here we are some 2 or 3 odd years later, after Janet Yellen and those guys made the statement, and we're here dealing with these high prices that's here to stay. It's never going back to normal. And the futures show that. The futures are down 41 points, as I showed you here. Market open. NASDAQ futures are up just a little bit, 0.01%. But, some of the big market movers, of course, all your Magnificent Seven and NVIDIA, some little change here and there. But you can expect this volatility to continue way past November and October and into next year as we get ready to go into this recessionary fear. So let me know what you think. What adjustments are you going to be making in your 401ks or stocks? Pick stock market or cryptos or gold and silver. Tell me what holdings you're going to be holding. Holding more silver, gold, cash? Are you going to be going more toward the stocks that nobody wants. Buy when there's blood in the streets, like Warren Buffett says. Let me know what your plan of action is going to be as we wait for this slowdown to come in the second half of this year, which we're just about getting on to now, just after Labor Day, I should say, rather. So thank you for joining me on this edition. I look forward to seeing you on the next edition, and take care.